Good afternoon. My name is Scott Redler, Chief Strategic Officer, T3Live.com. Welcome to what is today? Today is Tuesday, and it is the recap. What a crazy aftermarket. Before I did two videos trying to, put together some thoughts on what I feel like we could execute on based on what Apple reports, based on what Twitter reports, and obviously trading after hours is not easy whatsoever. And you should never do it, more than a tier one or a feeler or this or that. And also, going into reports, you should never just, pick a side and leave and think that what that your idea is better than any analyst, et cetera, et cetera. So anyway, with Twitter, I think a lot of people got, kind of turned around like me. I lost a decent amount. I did not go long the stock into earnings. I have options, which I said in the video, and I was waiting to hear what Dorsey said, or Jack said, in order to see whether or not he left a little bit more for the quarter. Because remember, he upgraded the guidance, and he upgraded earning this quarter. So when I heard the first numbers where it was above 5 cents, above the revenue, above MAUs, I was like, wow. They started going after 32s and 33s, which was that technical breakout. And I know for me, I jumped in there too. And then all of a sudden, they came out horrendous guidance. So I wasn't even thinking. I was thinking that, they'd probably be a little bit better and then guide higher. Thinking about the fourth quarter might be a lot more activity, et cetera, et cetera. And, PS, they sandbag guidance. And, so I went from, I bought, someone made money off of me. I was buying, I think, 32.50s, and I hit it out lower than 30. And now it's trading, I think, at 28. So anyway, at this point, that was kind of sneaky for them to, come out and up guidance for this quarter, and then, bring down guidance every quarter thereafter. Just whatever. Just what are you going to do? This is 28.74, which was the channel support's a little bit below. Here is bigger support down into the 27.40s, which it was trading. Options, if you took them, are worthless. It's what happens. I think 90% of options go worthless. If it was at 35, you'd be happy, but it's not. And again, if you act quick when you hear numbers and you try and get a quick, quick jump on it, you can get hurt. And I actually lost a decent amount of money buying, 32, 33s and hitting out 30s, and it's now down where 27, 28, and I probably will not be trading the stock again for a while. For me, why, come out and read it and raise your guidance to only then lower your next quarter and for the year to what? Push up your stock so other people sell it and people can get out, and you get to sandbag those who don't know what's going on in the next quarter ahead. Whatever, that's done. It is what it is. Hopefully, you didn't get too hurt, and it happens in earnings season. It's not for everyone. With Apple, it was different. Apple has been doing a whole lot of nothing. Okay, in the what's it called? Let's say every bear out there in Apple, if you come back to me, was thinking that a real miss is going to be like 45 million iPhones. Okay, not 48, which was expected. So when they came in 48, they hit the people who didn't really know what they were looking for hit it at first, went down $4, but then right away like, ooh, this is supposed to be their weaker quarter, and they're coming in line when the whole 6S cycle is harder to sell versus the 6 and the 7. All of a sudden, wow, not as bad. There are other, iPads are lower and there's some things, but it's people are focusing on the iPhone, and went from down 4 to up 3, and was a much better trade. Usually also after hours when things go positive and go and push, that's a decent trade too after hours, and it did it. And I think some people probably didn't trade it because they were battered from that Twitter nasty nonsense, friggin' Jack. Go be CEO of another company now too, and give your stock to charity to make yourself look good, and whatever. Anyway, so let me see where Apple's trading right now. I think Apple is trading at 118. What's it called? As I walked in here, now it's down to 117. So basically, in Apple, not much money to be made in options. They were pricing in $7. It's up 220. So if you took calls, you're probably going to lose. If you took puts, you're going to lose, and option sellers are going to make their money. And you have to have a huge move in order to make in that kind of area. So I went into Apple flat, and I just didn't have the head to trade it after hours because it got sandbagged in Twitter. Great. And anyway, so let's move on away from me and let's go to the market. The spiders, if you take a look here, you'll see that overall pretty controlled pullback above, or actually came into the gap briefly and closed a little bit above it, which still shows controlled pullback above all the moving averages. Couldn't even fill the gap. And now, after hours, it's trading up a little bit. This trend has been your friend if you've been riding it versus pressing it. And now we'll see if it touches it tomorrow or not. If it starts to get above this spot, then you're really in the high end of, this range. But anyway, pretty controlled. And we'll see what happens tomorrow. This little pivot here of 206.30 was good to use. Went below it a few times and people made a little money short, went back above it. There were some trades. All in all, pretty methodically or technically looking chart where you have your bottom, you have a higher low, it ignited, you had a gap up here that was never filled, took back the 8 and 21 days. So even if you miss this spot, being long from here is giving you a nice trend to follow until it changes, and it hasn't changed yet. The IBB's actually perked up, and cleared this spot. We've been talking about this 320 area for a while, and today was a decent trade above it, on its way to maybe the 200-day right there. Here was your sideways support, held halfway, so gave a decent trade there. Celgene's down a little bit after hours, so we'll see how that affects the IBBs tomorrow. On the flip side, though, you have another divergence. You have the Russell's weaker. So this is what this market does. It makes a lot of people a little off balance. Here was your resistance, which it hasn't been able to get through. It hasn't fallen out of this channel, but it was pretty weak today, and still just, I'd say, let it sit there and to prove that it could go higher. Maybe you made money short, that's fine too. But at this point, it's still lagging. As far as the XLE, they closed below its channel yesterday, so gave some people a nice short. If you're looking to be short something with oil closing weak and this closing below the channel, some guys got short and you got paid. And at this point now, it came off the low, so we'll see if it tries to rally back up here, and then if it fails or whatnot, or maybe not even have the power to do that. Now I guess you could expand this range. It's now at the lower end and it's still above this gap support. So covering a little bit on the open made sense if you were just looking for a day-and-a-half trade. In my morning note, I talked about maybe getting a red to green trade in Amazon because that was lower this morning. Same thing for Google, and then maybe even a quickie in the broken names that you had to be real quick with. Anytime you trade broken names, you better be quick. And that was your Netflix and your Tesla that both went from red to green and then went up $1 and fell apart. So yeah, this market is for people who have, I guess, quick feet and some staying power. You look at Amazon, still looks really good. Amazon held its earnings gap. There you go. And it's developing a new little channel here, and you'll see what's next. It went from, down, a few bucks to then trade above the prior high here of 610 and gave you a move up till 614. So that's a nice little active trade, calculated. Google took longer than Amazon to do it, but it also was down $4 or $5 and then went up a few dollars and above the earnings gap. If you're in it based on versus the gap here, then just stay in it and don't overtrade it. If you were trading it tactically and came in flat, I bought it down like $4 and sold it going green, and it was cash flow there. And we'll see how long it takes to build the range here before maybe getting above that. Remember this little mess job here where it looked great, pushed above, failed, and then discounted. And then kind of did the same thing here. It looked decent, gapped up, went sideways, tested everyone's patience. Everyone thought this time would be real, and then it failed. So this market is just, these computers good. Yes, they are. Anyway, it's still in the bottom end of this little channel here. I guess if it were to push above this, then we'll see how it handles that spot. But overall, wide ranges, 5 15-minute charts are just fine. The banks didn't do much. Goldman Sachs was weaker in most of the day, and then came off lows. It's still, this is just not a heck of a lot going on here, but it did hold this area, and maybe at some point it gets a little higher. We'll see what happens with the Fed there tomorrow. Citigroup not doing a whole heck of a lot either, just in this range with not much traction. So I'm not in that. I actually sold it the day before. What else is going on? Let's take a quick look at Apple. See what that's doing again. Hold your horses here. Apple is up to at 116.75, so up 2%. So again, I guess the puts will be worthless. And if you're shorted, if you were shorted into the print, you know, you had $4 and you had to be quick to cover it. You know, and if you were a little prepared, saying, okay, 48 million is not a bad number. Bad number was 45. You could have covered and flipped and made a little cash flow there. But again, not easy. So we'll see how it shakes out. You know, this month has been pretty methodical, and I think a lot of guys are doing pretty well. Those who are not doing well have been fighting it and just short on the brain. And you know, I could see why, but the action hasn't given you really that, you know, conviction to do so. But you know, everyone has their strategies. Let's see, like, what did Celgene do today? Celgene, I think Sperling had a good trade with. Just look at the pattern, though. You know, Celgene, you know, was holding sideways. I know for a few times it couldn't get above, and then look what happened when it got above this descending channel. 3 green days. Typically, you know, but buy day 1, add day 2, sell day 3. You know, that's a whole day count scenario. Some guys were looking at JUNO. What did JUNO do? JUNO, clean. You know, look at that. This was move 1 above here. Then it went into a channel once again with a little red dog reversal there, and then gave a clean breakout trade with the IBBs leading all day. So that's a calculated trade. These are calculated trades after hours. Wild, wild west. Let's see what else. ZIOP, some guys were long. Let's see what that did. That too. Clean, tight, breakout. Makes sense. Here you go. Boom, boom. You know, held higher, took back the moving averages, gave you a little follow through. So the bios, believe it or not, had the most calculated tight setups that expanded. And that obviously includes, again, the IBBs that broke above here. Now we'll see if it, you know, can take back this 200-day. You know, in Twitter I said it can get to about 328 if it cleared this, and it's close. We'll see what happens tomorrow. You know, at this point, you know, the day is over. If you got a little smacked around, go do something fun. Don't drink too much, or you can drink a little bit. The Met game's on tonight, but you're probably better off going for a run or going for a swim or doing something to shake off that, that scenario. And if you feel like you missed something, you know, don't feel like you missed it, because these things have been making some round trips, and you know, there's been lots of opportunities, and it's still only October. We got November, December in front of us, and there'll be lots of movement. And the last thing you want to do is, you know, dawn on something or focus on what you did wrong, and then just revenge something else, because that doesn't do anyone any good, and that doesn't do yourself any good. Chances are you'll lose a lot more than you would have lost, instead of, you know, taking a step back, brushing off your shoulders and saying, okay, let me, you know, relax a little bit, and tomorrow's another day, and not try and make everything you might have lost in something in one trade, you know, chip at it and chip at it and chip at it, and then you'll make that back, and then you'll be well on your way, and you'll have learned a lesson of being a little bit more careful after hours, maybe waiting a little bit more after hours, or not trading after hours at all, because typically a lot of the times it's erratic, thin, and hard to do. So I will see you tomorrow. Amelia will be here, and go Mets. Have a good night.